Keane are a design and strategy firm based here in Dubai. We've been here 15 years with businesses also in UK, KL, Singapore, and across the world. Thanks for coming back in. Gentlemen, I'll pass you across to my right. Ovais, tell us about Abraaj.
So we're private equity investors. We focus on growth markets, and we've invested heavily in consumer and in the restaurant industry around the world over the last 15 years. I guess the key brands we've invested in are places like Wine Connection in Thailand, Malaysia, Singapore, PS Cafe, Singapore, Malaysia, Pancake House, Kudu in Saudi Arabia, Java House in East Africa, KFC in Turkey recently, and Acurio in Latin America and in the US and Europe, which is brands like Lamar, Astrid and Gaston, and Madame Tanta.
Thank you very much. Walid from Cravia.
I think I'm okay. So my name is Walid Hajj. I'm the executive chairman of a company here in Dubai, based in Dubai, called Cravia. I'm also the founder of the company. We founded the company about 17 years ago. We specialize in operating franchise brands, franchise food brands. We started with a brand called Cinnabon, then added Seattle's Best Coffee, Za'atar Uzayt from Lebanon, Five Guys, Carvel Ice Cream, and the Steak Bar. We have about 100 restaurants in our portfolio, 4 markets, and about 3,000 people that work for us. And thank you for this opportunity.
Pleasure. Sagar.
Hi, friends. Hi, friends. We are Wow Momo. We are India's biggest homegrown QSR chain with 170 outlets across 11 cities. We began Wow Momo with only $500, and today the company is valued at $7 million USD. So it's been a huge journey, currently living our dream. 1,600 people working with us. It's our team that makes us what we are. And now looking at expanding into the GCC and other countries outside India. So, you know, brands like Domino's, KFC, McDonald's have come to India and been international brands from abroad which has come to India. We want to be an Indian brand that goes abroad. That's our dream. That's our vision.
Fabulous. Thank you, Sagar. We started the day with Ruth talking to us about emotion. Remember that? And I'm going to try and draw a parallel between emotion and emerging markets. Because if I say the word emerging markets to you guys, some of you suppliers, operators, brand owners are probably thinking, money. There's money in the hills, right? I need to get in those emerging markets. I want these guys to tell me which are those emerging markets. I'll leave the room. I'll do that straight away. Last year, we heard Iran was an emerging market. So I'm hoping today that we'll hear from this group about where are the next emerging markets, what defines those emerging markets, how do you crack them. And what I like is that with these 3 guys, you've got 3 different perspectives, right? You've got the Cravia, who've been here nearly 20 years, and this was, if you remember, an emerging market. It isn't now, it's pretty well emerged. We've got Cravia, we've got Abraaj, who are going globally with a whole bunch of private capital investments and some great brand names in there. And of course, from India, of Sagar, who's starting that journey as well. So I might actually start with Sagar because he's starting that journey. I'm quite excited by that. Sagar, what are your plans? How do you define an emerging market? What is an emerging market for you? How do you crack it?
So for me, it's very simple. You know, emerging markets are where the juice lies. You know, you can just squinch onto the juice. It is where opportunities are humongous. You can just grow and grow. Okay, I mean, if your product is good, if your service is good, no one can stop you from being a brand. It's about getting the customer back again and again, you know. I mean, today we are in the food industry. Food has an emotional connect. It goes by the word of mouth. And today, word of mouth has become word of media with LinkedIn, Twitter, Instagram. So I think emerging markets is somewhere where you can just get the entire throughput to grow at a phenomenal pace, meet the pace of operations with the pace of expansion. And I guess there is no end to it. I mean, 2 stores would lead to 4, 4 would lead to 6, 6 would lead to 8. And you know, in our industry, it's very important to be profitable. You know, I mean, economies of scale have to be really well controlled. So it's not just about the top line, it's also about the bottom line. And emerging markets, the real estate cost, the cost of living, the cost of employment is much lesser compared to the developed markets. So I think it's where the opportunity lies. You do business to be profitable, and I guess bang on, you know, I mean.
Where do you want to go next, Sagar? Where do you want to go next?
So outside India, we want to come to the GCC next, and I am here, I'm happy to be here. We feel it's an extension of the Indian subcontinent to an extent. Familiar people, a lot of expats. And you know, I think when you move outside your homegrown country to go international, your first few countries really matter a lot. And I think GCC, it's got a mixed crowd, a lot of expats, a very cosmopolitan crowd, and people accepting different kinds of food. That's what I've observed.
Walid, you were 17 years ago, roll back the clock. This was an emerging market. It was a very exciting time. Has it delivered on what you expected from 17 years ago?
I think it has. I think it was an emerging market. It's definitely an emerged, developed market today. I would say, from the aspect of casual dining, from the aspect of restaurants and where we play, it's actually a first world kind of a categorization. And I say that because you look at the level of penetration that exists today in the markets in terms of number of concepts, in terms of number of stores, in terms of ability and habits. And I grew up, I was born and lived all my life in Saudi Arabia before I moved here. And I remember growing up that we rarely went out to eat. It was always in the house, always home cooking is big. And today that kind of equation has changed. And as a result, that market has developed and emerged. But if you look at the dynamics of these markets, Saudi Arabia, the UAE in particular, Kuwait as well, you will find that, there are opportunities for sure for new brands to come in. I'll give you my business card at the end of the session. But at the same time, it's really becoming more and more challenging to find the niche, to find areas of growth. Every brand that you can think about that exists anywhere in the world, in the developed world, if you look at the US in terms of franchising and so on, already exists here and exists here in a major way. Shake Shack moved to the UAE, opened their first Dubai store when they had 7 stores, I think, back in New York, or in the US actually, maybe a few in New York. There was one in Florida as well. So this market has a lot of attention, but I think it's, I question major opportunities going forward, and I question the label of emerging markets.
So where would, Walid, I'm not sure if you can share it with us, but what markets would you look at with your business going forward?
I think we are in a different situation because we're already established. We already have those brands. We already, we're close to 100 stores. We're already in Saudi Arabia, which I believe is a huge market if you are able to crack it and if you're already there. So for us, on a micro level, that's our focus. We continue to be very regionally driven because we understand the market. I'm not in a business, I'm not opening new markets or looking at new countries at this point beyond our current portfolio is not an option for us. It's not something that we're looking at.
Interesting. Ovais, from Abraaj Group, I looked at your website, a wonderful phrase in there, to deploy private capital to tackle some of the world's most pressing challenges. A wonderful aspiration. How does that relate to the restaurant world with our people here?
Well, I'll take a perspective, if I may, around how we see the restaurant industry and the geographies where we invest. I mean, the reality is every market's different, every region's different. There are common factors. I think the common factors we see across everywhere from Thailand to Karachi to Lagos to Nairobi to Lima is essentially around consumer expectation. People want great experiences, they want value for money, and they have an enormous repertoire. The choices in every city we invest in have only got greater. You go to Nairobi, and you've got ourselves with Java House, but you've also got Art Cafe, and you've got News Cafe, and you've got KFC, and you've got any number of players in the market. Consumers have got used to choice, and they're very, very unforgiving on weak operations and weak service, and weak menu, and weak experiential. So what we're seeing is an enormous acceleration in what consumers expect. We're seeing a huge amount of multinational and increasingly local competition. We're seeing local operators who know how to do it really well. And I think the market is becoming challenging because of both competition, real estate, labor cost, inflation, and generally differentiating yourselves.
Ovais, I'm intrigued. Do the guys at Abraaj, you sit in a room and choose a country, or does someone approach you, or are you proactive? How does it happen? How do you choose a market?
So the reality is that, you've got to look at a market on an individual basis. You've got to look at the brand and the value proposition of the business. What is the operating track record of the leadership team and the management? What is the menu, the positioning, the pricing strategy? Does catchment and other analysis tell you that there's growth potential, or is the brand tapped out? So, coming at it from an investor's perspective, I would say there are enormous opportunities. Of course, Africa's, to a large extent, a greenfield opportunity. Of course, there continue to be opportunities in Asia, and of course, they tend to be in the Middle East and Asia and Turkey as well. But the reality is, I would caution that unless you've got a really true sense of the consumer, unless you've done your analysis, unless you've got really strong operators, unless your supply chain and your pricing and your value proposition stacks up, unless you've got a positioning and a marketing mix that makes sense, it's getting increasingly challenging, and you've got to think about scale, quality of leadership, and, menu by definition.
Does it get as cold and as commercial that when you do the deal, bear with me, that you're actually thinking about the exit at the same time as that deal is being done?
So you've got to think through the incentive that you and management have to create value and where you're going to come out at the other end. I think any investor who says, we're not thinking about the exit is not quite telling the truth. But the reality is it's not the first thing on the table. But you've got to think through across taking the business public, or across platform strategies, or across merging it with another player, or acquiring and buying and building, how do you scale and how do you grow? And obviously we know in the restaurant industry, it is about economy of scale. It is about efficiency in supply chain vis-a-vis footprint. So you've got to think about growth. And so I think for me, the UAE and the GCC in general, Saudi has its own challenges, the UAE has others. But Dubai, the UAE, it's a very, very, very tough market. I was listening very carefully to the gentleman from Atelier. This is a tough market to open in, especially in upper-end concept.
It is. I'm going to go from high finance to dumplings. Sagar, when you created the concept in the garage in Kolkata, did you think these dumplings could go global, or were you thinking more on a small scale at that stage?
No, so the dream was always to create a brand. Okay, and obviously, when we think of pizzas, we thought of Pizza Hut and Domino's. We felt that, let's play with dumplings, let's play with momos. No one has really played with momos. Why can't there be a brand with momos? So that's how the idea started, and we've literally played with momos, So right from your steamed momos to your pan-fried momos, which are fried and tossed in sauces. We have a momo burger, which is like juicy. You have chocolate momos as dessert. We have a baked momo gratin, which is like a lasagna. We have sizzler momos with rice or noodles. So it's about converting a snack into a meal, and that's what we managed to do successfully. And it's about playing with product. It's about making food fun and giving the consumer something new, innovating. And when you make food fun, consumers look forward to it. And when they like your base product, which is the normal dumplings, the steamed dumplings, they trust your brand. And when your staff at the store tells them in a very smiling manner that, ma'am, we've launched a new product called pan-fried momos, they are more than willing to try it because they already have a trust factor in your brand with the basic products. And the more they try, the more they experiment, the product just goes on going. And you also have failures. There are some products that don't click. So it's about
the scary things here. If we said to this crowd, who eats Momo, I don't think many hands will go up. Who eats dumplings, not too many hands go up. How do you overcome that? I mean, it's an unusual choice, but it's clearly working. So how did you stumble across that?
Currently selling 4.5 lakh momos in India per day.
Fantastic.
So it's about building the brand. So how do you build a brand? See, brands are built in the minds of people, right? You have to create an impression in the minds of the people. So right from your packaging to the T-shirt your staff wears to the way he's smiling to the look and feel of your store, you have to roll eyeballs. We are not a brand from America which has been there, done that, and come to India or come to the Middle East with a name. You have to create that name. You have to get eyeballs rolling. And I guess you have to create that impression in the mind of the consumer. So brand building is actually an art. It's a mix of art and science. So you have to, get walk-ins to happen. And once they taste your product and they like it, they're bound to come back again and again. And like I said, food goes by the word of mouth. You eat it, you like it, you go and tell your friends, they go and tell their friends.
This is an investment conference. I'm assuming low capital, good margins, low payroll.
Absolutely.
I'm guessing.
Our paybacks are very quick. I mean, really, really high on ROI. I mean, we are an EBITDA of close to 20% right now. We are the only homegrown profitable QSR chain. And our first 43 stores were funded by our customers. We had no equity funding. We had no debt funding. So when your customers become your biggest investors, that means your model has clicked.
Interesting. Walid, from Cravia's perspective, you have the Five Guys, fantastic franchise. Any more plans to grow that within the region?
Yeah, so as a company, we believe in growth. We believe that actually there's a motto that we keep repeating within the office, and it's actually written in our office: if you don't grow, you die. So we're always looking at opportunities to grow. Five Guys is a brand that we acquired for Saudi Arabia, Qatar, and Bahrain. We're already about 8 stores in Saudi Arabia. The biggest store in the world was in Riyadh. The biggest store opening in the world was in Riyadh. The second biggest was in Khobar, Saudi Arabia. So it was very, very successful launch. We think that we have a lot in our table, in our plate, as far as growth opportunities with Zaatar Uzayt and Five Guys, particularly in Saudi Arabia. However, at the same time, we are in the market looking for two things, either acquisitions or new brands. And we're not in the business of collecting brands just to show them in the back of my business cards. We're really looking for quality brands. We're looking for what I call super brands. And I think Five Guys is one of those super brands. It's something that, you know, when you bring it into the region, it comes in already with a brand equity that helps it in the early stages. From a growth perspective, I should also say, you know, similar to what Ovais was saying, we have a private equity investor that came into the business about 2 years ago, and they own majority share. And the whole idea about this business now, I mean, exit is not, you know, first come to mind, but the idea is growth. So we're looking at growth opportunities through acquisitions, existing brands that are in the region that have the potential but don't have the funding, don't have the know-how. We have a very strong management and infrastructure team. So we're always looking at ways to grow that way.
Interesting. Sagar has a product which is very much value-oriented. I think the price point, $1, $1.50?
So it's from $1 to $4, $1 to $4.
Now, I've always been intrigued by Seattle coffee because I've always seen that at a lower tier price point than Starbucks. Is that a growth brand for you guys?
Definitely. I think we love the coffee business. We think that not only that we have a well-positioned product, but I think with all due respect to every other brand, we think we also have a superb product. The product itself, from a quality perspective, blind taste tests that existed, you know, that took place in the US, put us at a very high end in terms of the quality. The question is, you know, this business, this coffee business is very, very competitive. So how do you distinguish yourself? How do you create a sort of an economic or a competitive edge? And to us, you know, the combination between Seattle's Best Coffee and Cinnabon in one store gives you that ability to offer a fresh baked product in addition to your coffee offerings. So we're looking at ways to expand SBC in our markets, which is basically the UAE.
Interesting. Ovais, sorry, it looked like you were about to say something, but you're not.
No, I was just saying, I think coffee is an interesting example where Africa has not yet had a kind of pan-African coffee chain. So the answer is, as opposed to, you know, necessarily a Starbucks or a Costa or a Cafe Nero getting there, you know, there's certainly supply chain opportunity. There's obviously an emerging trend in coffee over time, which will reflect what's happening in MENA and in Asia. So, you know, I'd say, example, Africa growth opportunity in multiple areas of QSR and casual dining, and certainly coffee is another one.
We were talking about Java House in the break, and we're fortunate to be involved in the guys on that. And we were saying that what we like about Java House is African hospitality. We've seen Tribes that more the Emirates does well, but I think that's one of the strongest USPs of that brand.
Yeah, I mean, I think, you know, no one has owned the territory globally of African hospitality. Lots of other people have done it with different ethnic tastes and different food items. So I think, you know, that's a space that could certainly expand across Africa. The East African sub-region has created brands like Java. There's no reason why you couldn't potentially expand that into West Africa. You've got West African brands which have emerged and are quite strong. They have expansion potential as well. So I think what you're seeing is, you know, you've got the well-known players, and obviously Walid's got a super portfolio of some of those great names, but alongside those big players, there's real expandable potential, I think, for African, Asian, Middle Eastern brands to go outside of the core region even wider. There's no reason why a Middle Eastern brand couldn't go to Africa, for example.
So would Java have, forgive me, go ahead, Walid.
If I may, I think it's an interesting point because, you know, we've dealt with franchises all our lives, and we've always brought, I'm talking about Cravia, and we've always brought these brands from mainly the US into our region. And Sagar is talking about taking his brand from India to the West. From our perspective, I think we have a jewel of a brand called Zaatar Uzayt. And this is really, in my view, one of the strongest brands that exist in the region that can actually go global. You have the variety of the menu, you have the ability to actually attract, I mean, I know from Dubai, attract a whole wide, you know, spectrum of people, backgrounds, you know, from people from Asia, you have, you know, Europeans, Americans, of course, in addition to the people from the Middle East. So really, to me, that's an interesting idea. When you talk about emerging markets, when you talk about globalization, it's also about emerging brands within the region.
Absolutely.
Going international.
We're going to go to the floor in 1 minute, so one last question, so get your questions ready. Sagar, pick a country. I mean, you said UAE was interesting to you, but why UAE? What other markets would you look at?
So when you talk about emerging markets, for me, it's the whole of Morocco from Vietnam to the Middle East. I think that entire belt is emerging at a very rapid pace. But why GCC or why the Middle East is because I see a lot of expats coming here from across the world. And today when they are coming into Dubai and they see your brand, in India we say what sees that sells. In Hindi we say jo dikhta hai wo bikta hai. So what sees that sells. And I personally believe that for us it's an extension of the Indian subcontinent, similar people, a lot of Indians here, a lot of people from Asia here. So, similar conditions, similar climatic conditions. And the first country that you go outside India or outside your own homegrown territory, you have to be bang on, okay? And it's going to be about tasting water. So you have to be perfect because it's going to shape up the entire journey of you going global. So I think you have to be very strategic. You have to really think it through. And our kind of product is something which really goes with footfalls. So the mall culture here, the retail thriving here, I think the entire ecosystem is ready to go ahead with QSR. And people are willing to innovate. People are willing to, go for a quick bite. I mean, life has become very busy. Food has become like an entertainment. So people are willing to try new stuff.
So fundamentally, if I'm investing in your business, how do I know that my target market, my demographic will like dumplings? Do we focus group it? How do we do it?
Like I said, the model has clicked in a particular market, which is India, and we see so many Indians here. The product is something which is steamed, so we call it healthy, and then we have the spicy stuff and the different flavors to it, which we call wealthy food. We don't call it unhealthy food. So it's a mix of both healthy and wealthy food, and I think health sells. People are looking at trying different kinds of substitutes to be fit, focus more on their health, and nothing better than a steamed dumpling option because it makes you feel good about yourself. You don't put in too many calories, and we also have wheat flour, we have rice flour, so you have a whole new gamut of healthy quick QSR. That's what Wow Momo has done.
Thank you, Guy. Sorry,
If I
Ovais?
could just mention one thing. I mean, I'd come back to your point around art and science. I think, expansion is an entrepreneur's art, but at the same time, the lesson we've learned is you've got to be rigorous on assessment of geography, segment, catchment, value proposition, pricing, supply chain. It sounds really kind of a little bit over-scientific and a bit boring, perhaps even, but, the reality is there are enough failures in the restaurant industry of people who've tried to expand and go too fast or misunderstand the menu and how it applies to your local market. The way to mitigate that risk, you've got to be analytical, you've got to work with strong local operators who know the real estate market, who know the nature of consumer behavior, who can get the pricing and the menu right, and who get the positioning right, because even a positioning varies, whether it's from India to the UAE or whether it's from Morocco to Tunisia. It varies country by country. So restaurant consumers are very, very local.
Questions from the floor, please.
The kind of food that people like, today non-veg really thrives in the Middle East, beef, chicken. And when you have dumplings with those kind of fillings inside it, it's juicy. So, you have to give people what they want.
Let's hear from the crowd, please. Expansion is an entrepreneur's art. I like that. Guys, questions, please. First time today. Warm them up. No hands.
We need to break the ice.
It's either a good thing or a bad thing. I'm not sure which.
Oh, we got here our Bulgarian friend.
Which one would you say is closer to the way you look at this destination? Should I repeat it? Was I shouting loud enough for everyone?
Dubai as a test tube for concepts.
If I could just jump in with one point. I mean, I think testing anything with your own money or other people's money is quite a dangerous thing to do. I mean, I don't think testing anything is useful. I think you've got...
Private equity, guys.
It's money, right? Money's money.
Well said.
And, burning money is burning money. So I think testing a market is fine if you've got a very, very low cost and a low risk way of doing it. Dubai is not necessarily a low-cost, low-risk way of testing anything, right? So the reality is this is a market that's real. It's got to prove out here to an economic level that justifies expansion. So if you do anything here, it's got to be based on fundamental economics. That would be my view.
I think also what I would add is Dubai has this attraction of being so international. Give you an example. My kids in school here, they have 80 nationalities in one school. So you can imagine the amount of internationalism that exists here. So any brand would be attracted by that. But I think the thing that people keep forgetting and they get mesmerized by the looks of things, that anything would work in Dubai. Dubai is a great market, but it's so tough to do business here. The failures are much bigger than the successes. You don't hear about the failures, you hear about the successes more, and that attracts more people to play in. But the cost of doing business, the level of saturation in every single sector within the business is saturated and is very tough. Unless you have a strong concept, unless you have a business that has some kind of value to grow, I think it's a very, very risky business to do to start here.
And if it works in the UAE, it does not mean it will work in Bahrain, Muscat, Qatar. It just won't. So I'm not sure what you learn from it. Any more questions? In the middle of the floor.
I guess the question was to Walid. 17 years, knowing what you know now, rewinding, what would be the one or two things you'd do differently?
I think, through our journey, we had a lot of successes, but we had a lot of failures as well. The one thing that I would learn is, it's a very academic phrase, but, you can become, your success can become your own risk. You become a victim for your own success. At one point, we thought everything we're going to touch is going to turn into gold because we were successful with our first 2-3 brands. We launched a brand in 2008 called Roadster Diner, and it failed miserably. It was going to break the company, in fact. So the one thing that I would do differently is choose my brands and my franchises better. I think the portfolio that we have now is amazing. It's like was said, it's great brands. But I think along the way, we could have chosen additional brands more carefully, and we could have had more success with those. But I was young and foolish at the time, so.
Any more questions? If not, I think we'll round it up. We are on time. Thank you very much. Thanks for your time.
Thank you.
Cheers.
Pleasure. Thank you.
Thanks, guys.